Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some Bulletin board hero stocks on Tuesday, the 18th of November. I'm starting off with the Fitbug holdings, which is something of a lap of honour in terms of the recent trajectory to the upside. We had the initial move to 8 pence, consolidation towards 4 pence, and rebounds intraday off the 10-day moving average shown here in green. The view was that break of 5 pence would lead back to 8 pence again, which obviously it's done with relative ease. Unfilled gap to the upside at the end of last week gave the strong push towards 12.75 pence to start the week. It might be worth noting that 12.5 pence was the high in 2010. So that if you are a bull of the situation, you're probably waiting for at least an end of day close back above that level before chasing the stock higher. Obvious support in the near term towards the 8 to 10 pence region, which is the resistance on the way up. But in the meantime, 12.5 pence, the resistance level to look out for at the moment. Next up is Roxi Petroleum, which was a favourite here earlier in the year. Obviously, the sharp pullback from the September peak, which was 25 pence, which was actually called at the time. So the shares did behave themselves from July to September, but since then, rather more problematic. The big plus point really is that support has come in above, well above the 200-day moving average, currently at 9.5 pence, and we've got these support points 10 pence plus since the summer. The view now is that we've got a possible W-shaped reversal, a positive feature here, and that while there's no end of day close back below 12 pence, we should start to retest the best levels of the year through 20 pence. The cautious on the shares maybe, as usual, wait for the 50-day moving average. Currently it's 15 pence to break before pressing the buy button. Next up is a stock which is Savannah Resources, which is a stock which is looking rather encouraging indeed. Looks like we've got a bull flag based at the 50-day moving average at 5.11 pence, shown here in blue. We've had most of yesterday's price action to start the week above the 200-day moving average at 5.72 pence, something which is normally the sign of a sustained or a sustainable move to the upside. I've seen on Twitter some chartists have looked on this price action here since September as being a possible cup and handle, but whatever way you look at it, above the 50-day moving average, we are looking very positive here, and Savannah could head towards the April resistance zone at 8 pence over the next 2 to 4 weeks while the 50-day line holds. Finishing off with a stock which has also had better days earlier in the year, that's UK oil and gas. Interest here is really Monday's sharp hammer candle, and looks like also a bounce off a line of support from June as well, which could be the bottom of a trend channel, a mildly descending trend channel from the beginning of the summer. There's also an uptrend line in the RSI window, which has been double tested over October, November, so that's providing some positive momentum, as is the way that the initial November low has become a bear trap feature. We briefly dipped below that on Monday and then shot back up again. If you're cautious on the shares, and probably anyway, it's probably better to wait for an end of day close back above the 10-day moving average at 0.48 pence, but definitely one to watch at the moment in terms of being a possible recovery in UK oil and gas shares. Anyway, that's it for me. More updates at spreadbetmagazine.com.